Why I'm in the office today? Well, today more than any other day is the day when I get the most emails about people's pensions, because as we approach the year end, people are starting to look at 2025 and thinking, right, I've got a bit of time because it's the Christmas break into New Year. I'm on holiday and oh my God, we've just spent a lot over Christmas and I really ought to sort out some of the admin, including my pension in particular, SIPs, ISAs, wherever you are in the world, the equivalent of your pensions. So here are some of the questions that I've had come in both on WhatsApp, emails today, and on social media, LinkedIn and the like. And don't forget, as a hedge fund manager, you can reach out to me. The links are in the bio, alpeshpatel.com/links. And through those links, you'll also get free copy of that as well. One of my 18 odd books that have been published on investing from my time at Bloomberg TV, but also before I set up the hedge fund, and also my 200 columns in the Financial Times consolidated into that. So what are the major questions? Well, I've got everything from, if we take a sort of a sliding scale, everything from the very beginner. How do I even begin, Alpesh? And I say to them, well, you need a broker, which is a glorified bank account. Basically, somebody opens a glorified bank account for you. It could be a Barclays, it could be a Charles Schwab, an E-Trade, Interactive Brokers, Interactive Investors, Free Trade, AJ Bell, and the like. Okay, and it's like opening a bank account, but you'd open a SIP or an ISA or other pension, like a 401k, for instance, if you haven't already got one. Okay, what do I put in it, though? How do I decide what to buy? Is it a Microsoft? Is it a Rolls-Royce? Is it Metro Bank or Apple? How do I decide? And that's a separate issue, which I cover on my videos and so on, which is based upon your risk appetite. Usually, if you're, again, let's take sliding scales to make our lives easier. If you're very risk averse, then you'll probably keep a lot in cash and you probably want a lot of funds, not the conventional fund manager funds, which underperform index trackers. You want index trackers. So what the hell is an index tracker, Alpesh? It's a basket of stocks, which is a fund. It's a fund which trades on a stock exchange, so you can buy and sell it just like a stock, called an exchange-traded fund. And these trackers are created by many companies, including, I think Barclays used to be a big issuer of them in the past, less so now, I think, but there are other big names you've heard of who issue these funds. And popular index trackers or exchange-traded funds include ones which track a basket of stocks like the FTSE 100, the largest 100 companies on the London Stock Exchange, or the S&P 500, which is a basket of stocks, the 500 largest American companies. There are others. There's NASDAQ tracking ones. There's world global equity ones, and then there are very niche ones like AI, but be careful about the niche ones. They sometimes have labels on there like AI to induce you to buy them, but they're not necessarily doing what they say on the can, and they're not necessarily, just because they've picked an exciting keyword, necessarily picking companies which are that diversified like the S&P 500 might be. So if you're an absolute beginner who's a bit risk averse, those kind of funds might be more suitable. And again, you might want to divide up your capital into a collection of such funds. Now, the separate issue is the longer you're holding these, the more likely, all other things being equal, you're going to be successful than if you're just trading in and out minute by minute, unless you suddenly discover you're the world's greatest hedge fund manager. Okay, so the elongated time frame will act in your favor. Of course, it can cost you because it could be in a down year like 2022. You've got to just see it through. So people like me tend to review every year, and during the course of a year, which is why I have my free links on Telegram and the like, just to keep people aware of what I'm doing. But most people, if they're total beginners, don't have the time, energy, or effort to do that. So they give up some of that gain in exchange for the lack of expertise. But if you do want to become better at it, do have a look, as I said, at the links in the bio or alpeshpatel.com/links. And follow, subscribe, like for more. And just actually, if nothing else, download a free copy of that, and it'll give you a good way to start through those links as well. So that's the starting point. Also on those websites, a couple of warnings. First of all, whilst they'll have very good education about what is a pension, a SIP, an ISA, so do look at that. Or just Google Barclays. I mean, there's not an advert for Barclays, but it's a name you've all heard of, so we trust it. Barclays SIP or ISA and then read their material. The warning is this: a lot of these companies like a Hargreaves will then try and just flood you with their own funds or third-party funds, and they'll talk about how wonderful the fund manager is and how clever and this is the next big thing. It is all a sales tactic for you to buy those fund manager funds. I don't like fund manager funds because, as Eugene Famer, who got the Nobel Prize in economics, pointed out, those actively managed funds tend to perform rather poorly than the index trackers. Okay, the exchange traded funds are my preference, not the human managed funds. Right? There's a lot of literature on this, but like I said, Nobel Prize winner looked into it, and I'd written about him and his work many years ago when I wrote that international bestseller published by the Financial Times. FT.com, there's my name. Whoops, where's it gone? There's my name over there. Okay, lots of wonderful reviews in the book. So anyway, have a look at the links in the bio, and you can also follow me on YouTube. See that silver little plaque I've got there? That's from YouTube, because I've got a bazillion views. I think over 2 million views and over 100,000 subscribers on there. So if you want lots of free content, do have a look at that as well. So that is the bottom line as to why I'm working today in a suit and tie, because it is the busiest day in which to answer these things. And given that you've got the time over the next few days before the new year and you're well motivated to sort out your pension, if I wasn't here in the office, then you might have wasted the next 3 or 4 days. Now you can be productive and just dip into some of the things that I've discussed. Any other questions that you have, just email me. As I said, the link is in the bio, alpeshpatel.com/links. And yes, I have a remote team around the world who are working over this period as we get the data ready for 2025 and the stocks that we're going to like, the funds that we're going to like, suited to some people who are very risk averse and just want funds, others who might be in their 20s and 30s and are more risk loving and want individual stocks, whether those stocks are in AI, quantum computing, or some of the big names you've heard of like Microsoft or Apple. They're not all tiny esoteric companies, but there's something for everybody. It's just knowing what your risk profile is and your investment persona. Anyway, that's enough from me. I hope to speak to you soon. Thank you very much.